Tim, thank you so much. Appreciate the time today. Given the short time we have, why don't we get through the presentation somewhat quickly and leave some time for questions. So next slide, please. Next slide. A bit about Amaero as well as a bit about my background. We are an Australian-based, obviously ASX-listed company. It's spun out of Monash University initially, focused on additive manufacturing ecosystem. So essentially titanium powder production is a thrust of the business today, as well as applied engineering and prototype development that we work with on our first tier prime customers. Myself, I'm a career finance person. I spent the last much of my career in private equity investing. I led a fundraise in Amaero in May. It was a $12 million fundraise, and subsequently a follow-on rights offering in December. My private equity firm has invested on the order of $18 million in Amaero, of which I've invested personally about $12 million in Amaero. I think that's part of the story. Is as Chairman CEO, we are a very activist investor aligned with other shareholders. Today, we own about 40% of shares outstanding, including the options. We own about 49% of outstanding. Next slide, please. It has been a bumpy ride. We got involved in May. It was a story of a company that was soon to deliver an atomizer in Victoria, would for the first time report revenues, and would shortly thereafter break even. Unfortunately, after I got involved, and naively so, I had assumed that many of the ASX announcements were in fact. We skipped some of the confirmatory due diligence we would have done in traditional private investments, and unfortunately found some disappointing things once we got on the board in the company. What we thought was a growth story has become very much a restructuring story. And you see here, since I invested initially at 21 cents, subsequently at 6.7 cents in December, we've announced the cancellation of the facility in Victoria. We've turned over the entire board, bar one. And as I mentioned, I've taken over as chairman and CEO. I have another business in Dubai called W Motors. That is a very visible business. We've got a long-term contract to replace half the fleet of a state-of-the-art patrol car for Dubai Police, as well as a $3.5 million hypercar that was featured in Fast and Furious 7 in Abu Dhabi. Very, very visible company. And as a result of that company and my relationships, we began focusing on the UAE. And as you'll see in a moment, we've announced a partnership with a very influential and highly strategic partner in the UAE. Next page, please. The joint venture we've announced is with Etmar Holdings. As you see on the right-hand side, directly from their website, this is His Highness Sheikh Hamdan bin Mohammed bin Zayed Al Nahyan's holding company. His Highness Sheikh Hamdan is the son of the current ruler of UAE, Sheikh Mohammed bin Zayed. And we have entered into an exclusive partnership for the Middle East, signed a term sheet in November, I believe it was, signed a binding agreement in December. And we've communicated to the market that we expect to finalize funding in the next 8 weeks and deliver our first atomizer, which has been completed already in Europe, which will have production of about 200 tons. Next slide, please. Importantly, the initial project that we've announced has a scope of about 300 million Australian. We'll sequence that or phase that in different ways. The first, call it 200 million, will be entirely focused on titanium. It'll be 4 gas atomizers. The reason here I was so interested as a private equity investor to get involved is, you can speak of base metals, but titanium is arguably the single most important industrial metal in the world. More importantly, given the conflict in Ukraine, there's a material impetus underway, a strategic imperative, if you will, to relocate, whether you're US, whether you're Europe, you're an allied country, sourcing of the critical manufacturing, sourcing the critical materials away from Russia, away from China. Remarkably, US defense prime contractors were sourcing 70% of their titanium feedstock from Russia before the conflict. And so we're looking at a play that's a very interesting, not only economic opportunity, but a very strategic opportunity in the views of national interest and geopolitical. Next page, please. We'll go ahead and skip through this given time. This is talking about VSMPO, which was a largest provider of Ti-64 to US first-tier primes and others in the world before the conflict. Next page, please. So if you look at the market, and this is the demand side of the equation, It's a very, very large industrial application as far as TAM, but more importantly, of all major industrial applications, it's hard to find another that is growing at a CAGR of 15%. You know, in finance terms, the demand will double over the next 5 years and will quadruple over the next 10 years. And so a significant market. And not only do you have the tailwinds of secular demand, again, you've got the thesis of relocating this critical supply from other countries. Next page, please. On the current demand side, about 50%, a little bit over that, is US and Europe. Collectively, North America, it's almost 2/3. You've got 4,000 tons of demand today. Asia Pacific, one would often think of China. It's not the case in this market. China is about half of that demand. But at the very same time, India, South Korea, Japan, significant demand and growing quickly as well. Next page, please. The next steps, and again, this is in very short order, we've announced we expect to green light the initial project, which will be shipping the atomizer that has been completed. It was about a 16-month build from Europe to the UAE. We'll stand up that facility. The first facility, which we have announced, the project that is, we expect will have terminal revenues of around $200 million and a significant enterprise value we would expect would result in the regrading of this company. It's an interesting project. Candidly, we would not have taken on a partner to the extent that was our only ambition. Moreover, I think Rob Dunn at Amaero would have been far less interested if that was our only ambition. Our project and our ultimate ambition aligns very well with priority initiatives in the UAE. And that is longer term, our plan is to vertically integrate the titanium supply chain, beginning with metal powder manufacturing. Going backwards, you've got mill and forge, you've got melt, you've got tie sponge, and eventually rutile and ilmenite as far as mineral production. Next page, please. With that, I'll open it up for questions. Again, I would just highlight, I think of this very much as a private equity investment, albeit we happen to be a public company. I looked at this investment as something where we would expect a return profile not unlike a private equity investment. I think it's a very asymmetrical outcome as far as potential downside versus upside. And we think that there will be material advances even during the course of this calendar year. With that, Tim, I welcome questions.
Thank you, Hank. Thank you for that presentation, very honest presentation. So you're personally involved in a heavy way. Essentially, you're here to rescue and restructure the whole business. I mean, what attracted you initially, and how does that growth profile now look with your involvement?
Yeah, first, let me say with a bit of humility, Tim, I made some terrible mistakes. We invested in this business in May and expecting we had a growth story, right? A growth investment is what we intended to make. I fault myself, right? This became a turnaround story, not a growth story. That being said, fortunately, I think the opportunity is very significant. What attracted us is the thematic strategic nature of this opportunity and the scale and the potential for that. So given the geopolitical shifting winds, given the importance of industrial metals, given the national significance from a strategy standpoint of relocating that supply chain, I think that's the bigger picture opportunity. Again, this one first project, we will turn the page and will deliver something of industrial significance, but the real opportunity is something much larger.
Yeah, I mean, we see that in the EV space, the need for the US in particular to own the supply chain. Where, outside of Russia, where does titanium come from?
Yeah, it's fascinating. You have to look at the entire supply chain. So on the powder side, where we'll initially focus, it's not so much in Russia and China. China does have a lot of production, but it's very poor quality. Canada is the best example and what we'll emulate. Most of the production is in the Quebec area, hydropower, very cost effective, and they compete very well on the cost curve. The US has production, Europe, Germany, Northern Europe in particular. Japan is a very strong producer. The European market is where we'll focus a lot of our resources and really want to become the supplier of choice. About half the supplies in Europe today are produced in Europe. And think for a moment what is likely to be the case of the energy cost in Germany going forward versus before Ukraine. This is an energy intensive process, and we have very favorable energy costs that we've negotiated in the UAE. So I think it will position us as a low cost, high quality producer and supplier of choice to Europe as well as the US.
So very competitive on the cost curve basis?
Correct. And yet high quality. We won't be as competitive as China, for example, but a very different category of quality and application and use, aerospace, defense, biocompatible, medical, for example, are the areas that we'll focus.
And the Rabdan working relationship, are they to provide CapEx for the project? And when do you kind of expect to be cash flow positive?
Yeah, it's a great question. And this is what I think is so unique about the relationship. And by the way, I think as an investor, I would be highly skeptical of any project suggest they're going to bring capital back from the UAE or KSA. I happen to have another business there. I understand the workings of these economies pretty well. I am actually relocated to Abu Dhabi, given the nature of this project. Our partners have committed to invest 100% of the CapEx. The arrangement is that we will pro rata contribute working capital. They will invest 100% of the CapEx. The economic arrangement will be a 50-50 venture. From a governance standpoint, which is important for export control and ITAR reasons, international trade of arms regulations, we will control governance, majority of the board, and appoint the chairman. We expect the project in the scope that I mentioned with $200 million of revenue. We'll get there, I'm conservatively assuming calendar year 27, potentially calendar year 26. We'll break even about a year prior to that. So I would think of break even calendar year 26, potentially calendar year 25. I'm anticipating working capital needs of about 50 million, 50. Our partners will fund half of that. We will fund half as 25 million. We ended the year with about 13 million of cash. However, we have on our balance sheet about 5 million of payments towards the atomizer and about another 1.2 million of R&D credit. That will come back to us. So we've got about 18, 19 million dollars of cash today. And we have announced we do not expect to raise any additional capital this calendar year and really would not expect to raise any additional capital till the end of next fiscal year.
Makes sense. And now you're focused on aerospace, defense, and 3D printing. Which one of these is kind of the priority, the focus? Where's the biggest opportunity, do you think?
Yeah, the focus is we've exited the equipment business, which I view as more of a commodity business, and moreover, we want to support that ecosystem. They're our customer. We don't want to compete against them. Think of it as I'd rather be selling the HP printer cartridge as opposed to the printer. I'd rather be selling the razor blade as opposed to the razor. So we essentially have become a materials company as opposed to a manufacturing company in product, with a focus in supporting the additive manufacturing ecosystem.
And in the UAE, it's kind of difficult to obtain qualified technical employees. It's a very specialized project. How are you going to manage this?
Yeah, it's a good question. The UAE economy, different from KSA or Kingdom of Saudi Arabia as an example, it's 90% expat. You've got a population of about 10 million, 10% Emiratis, the balance expat, and they've been incredibly aggressive at not only attracting talent, but institutions. New York University, Sorbonne, the Louvre, Indian Institute of Technology, Rochester Institute of Technology. So you do have a strong base there of expats. It's a tax-free environment. So it's an attractive place to relocate. We're in the market right now to make our first 2 key operating hires, and we expect that they will be relocations from Europe. A lot of strong manufacturing talent in Europe, and that's where we expect we'll hire and relocate from.
And Hank, just to finish up, the next 12 months, what are the sort of milestones and hurdles you're looking to achieve?
Yeah, the most important milestone near term, and I'm confident that we'll finish that by the end of this current quarter, is we will green light and begin the export process from Europe to the UAE for the first atomizer. We'll install that later this year. We'll be under commercial production by the end of this calendar year. And we will have funding commitments to proceed with this $200 million project. At that point, I think we will have turned the page of some of the struggles and the woes the company had before. And then we will proceed along this more ambitious vertical integration project.
Thanks, Hank. That's all we have time for. I know the market always supports successful businessmen who are aligned with their company. So thanks for your time.
Thanks again for having us, Tim. Appreciate it.